we've been tracking for you this evening. Out of the pan and into the fire, between a rock and a hard place. Well, we can take our pick of phrases to describe the situation Indian startups found themselves in 2023. Funding slumped to a 5-year low in 2023 with about $8.6 billion raised. It was just a fifth of what was raised in the record-breaking year of 2021. But as we close the chapter on a bleak 2023 and enter 2024, we're seeing some signs of spring. Aishwarya Anand is here to take us through the deal book for the year gone by. Take a look.
The icy winds that began to blow in 2022 did bring a lot of turbulence for Indian startups in 2023. Cautious investors took a breather to reevaluate their strategies and were quite hesitant to loosen their purse strings this year. The venture capital pipeline did freeze over, and as you can see, funding slumped to a 5-year low in 2023. $8.5 billion flew into the ecosystem. That was just a fifth of the record high seen in 2021 and down more than 60% compared to 2022. Funding collapsed across all stages, from seed to late stage. All saw inflows reduced by 60 to 70%. The fall would have been worse if it weren't for the bounce we saw in December. Q4 2023 would have been the lowest funded quarter in 7 years if it weren't for the surprise return in deal making and a string of checks over the last 2 weeks for the likes of Udaan, Grey Orange, Blue Smart, WeGrow, Fussle and Videoverse, among others. In fact, Udaan's $340 million Series E funding was among the largest rounds of 2023. The list is topped by PhonePe and Flipkart. Both the Walmart-owned companies are in the middle of raising $1 billion each. Lenskart bagged $500 million from Abu Dhabi Investment Authority, followed by a $100 million top-up from Chris Capital. And desperate for cash, Farm Easy took the route of rights issue to secure $420 million of the much-needed capital infusion. But what's to be noted is such large deals have been fewer and hard to come by this year, with a fall in $100 million plus deals. In fact, fewer large and late-stage deals also meant only 2 new unicorns took flight in 2023, Zepto and Incred. To understand the factors behind the collapse in late-stage funding and get a sense of what to expect in 2024, I spoke to the co-founder of Traction, Neha Singh. Listen in.
One of the reasons is that if you look at the late-stage funding, it was dominated by a few investors which had led these large rounds, including the likes of Tiger Global or SoftBank, which have become lesser active in terms of the deals that they've made this year. And this is not just in India, but also globally. So this is also one of the reasons why there was a slowdown in activity in the late stage. And because the late stage companies are more closer to their public comps, and with the public comps valuation having corrected, investors who are looking to deploy money are also waiting for the valuation to correct over here. So now that the narrative has changed also among investors, which is not growth at all cost and profitability, you see a lot of startups also gearing up for that and talking about when they will become profitable or whether they have already become cash flow positive or bottom line positive, right? So this is the other theme that you will see in this year, which we're really excited about, and that will help India create much more sustainable companies for the years to come.